Buy now, pay later usage hit an all-time high on Cyber Monday. That was yesterday. According to Adobe, it was up more than 42% over last year. It almost hit $1 billion worth of sales. It's good news for Affirm, which is up more than 145% over the past year and is on pace for its best month in history. Our next guest agrees, upgrading shares to hold this morning, citing momentum in BNPL and stabilizing consumer credit. Joining me now is John Hecht of Jefferies. John, it's good to have you. It feels like a reluctant upgrade. Why the long-standing reluctance?
No, I wasn't a reluctant upgrade, and thanks for having me on, Kelly. If you go back when we downgraded this about 18 months ago, there were two main factors we were downgrading on. One was higher rates would lead to higher cost of capital, whereas also normalizing credit, so increasing delinquencies from all-time lows and so forth, would lead to higher costs of credit. And those two factors would crowd out the gross margin or the earnings trajectory. And both those have largely played out, right? I mean, I think we all know we're near the end of some type of rate cycle. And for the type of consumer that Affirm serves, we're seeing a stabilization of credit. Now, why today? Why are we more confident now to take those factors and also upgrade the stock? Is I would note a couple of things. Number one is Affirm, their credit is outperforming their peers. The non-prime consumers still suffering, been really impacted by inflation. That's stabilizing now, but Affirm's credit is actually outperforming the peers. Their delinquencies are down year over year, whereas the peer group is up. And in addition, their funding is stabilizing. They've issued wholesale funding in the market to fund their growth 4 times this year with stabilizing terms. So we thought those two factors, along with what you noted about really positive Black Friday results, was enough to make now a good time to think about going to hold from a sell.
No, and listen, I totally agree. I mean, a lot of us have had skepticism that this new player on the block is just kind of battled subprime in fancy new form and should show more weakness at these early stages of the cycle, but it hasn't. And I guess my question would be, what do you think is going on overall with the people or the consumer and its usage of buy now, pay later? Because every headline I'm seeing or every hot take on social media basically says, oh, I roll the Cyber Monday spending because if all of that's or a big chunk of that's coming from buy now, pay later, it's almost like that's cheating or that doesn't count. Why do you think people have this sense about buy now, pay later?
Well, stepping back and thinking about consumer credit trends, I would say the following. We're still monitoring all types of consumer credit trends, and we're still going through some type of credit cycle with the consumer. The non-prime consumer is about 2 years into the cycle, which was really catalyzed by inflation. The prime consumer is now going through some type of exhaustion. So we're seeing delinquencies still creep higher. So part of this demand for buy now, pay later is likely tied to the fact that a lot of these consumers don't have access to other sources of credit. That's still net good for Affirm, right? The value of their service is climbing the polls of the consumers that have lost access to credit elsewhere. And given the rate of increase of adoption, Affirm can still grow, but also be selective. So I think that there's a balance that Affirm needs to strike here, given that it is still a net risky time to be growing rapidly with this type of credit product, but I think they're in a good position to do so.